Okay, welcome everybody to this evening's ACY Securities webinar. Tonight's webinar is a review of the recent Forex trading patterns. So I'm going to be looking at the month of June. How did price unfold? What was the trend? Did we get a change in market structure? Did any patterns set up, or was it simply support and resistance trading? So I'm going to be looking at that today. What can you learn in hindsight to help you with your foresight trading as you move forward? Okay, so that's tonight's topic. Any questions, just put them into the webinar chat and question and answer box. So before we get into it, I'd give you a heads up tomorrow. I've got live Forex market review, 7 p.m. with myself. Then at 8 p.m, we've got the quick start, or the Forex quick start webinar, where if you're new to trading, or if you're trading already but you're struggling with trend and you're struggling with your strategy, we're going to show you how to look at trend, and we're going to show you a strategy based on the day chart and the 1 hour chart, all traded from the 1 hour chart, giving you precise entry points, stop loss points, and we'll talk about risk reward as well. So if you need a refresher on trend, or you want to have a new look at trend basing on a daily and a 1 hour chart concept, then we'll be taking you through that tomorrow at 8 p.m, myself and Nathan. So you can register for that at the webinar page. I will have a link tomorrow for you as well, but just go to the webinar page and you'll see it there. Just register for it. It's just called Quick Start on the webinar page. All right. Enough advertisements. Let's just get through the risk disclaimer before we move along. If you could all read through that, please. So my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and full-time trader. Been trading the Forex market for more than 15 years now, and mentoring for more than 10. If you want to contact me, my email is down screen, duncan.cooper@acy.com. If you want to follow me through the week at our website, acy.com, go to the Market News tab, you'll get my analysis, or our YouTube channel, ACY Securities Australia. And you can connect with me on Twitter and LinkedIn. Most of my analysis goes through there. And you might find some free training resources there too, from time to time posting. And through the week, if you're going to get access to our analysis first up, then get access to our Telegram channel, contact Nathan, and he'll give you access. If you want to get access to my chart layouts and templates I'm using tonight in MT4, then as well contact Nathan. So I'll put his details in the chat. Got any questions about what we offer here at ACY, just contact Nathan. If you need help with a demo account, or you're thinking about setting up a live account, just contact Nathan. There we go. Azu, hello to you. All right, so let's get into tonight's topic. We're looking back at last month. What could we learn from last month's trading? Any patterns setting up, or what was the market structure? Was it changing? Was it clearly evident to what you should have been doing? So just give me one moment, because I'm just having a bit of a technical issue. All right, fix that. All right, I just want to double check that you can all see my charts. So if you can just give me a hands up. Somebody put the hands up and tell me you can see my charts. All right, that's great. Excellent, all the hands coming up. All right, so first up, I'm just looking at my list, 2, 3, 4, 5, 6, 7, 8. I've got 9 pairs that I could potentially go through tonight, just to talk about what was happening last month and what we could learn and how you could apply it, maybe move forward. I'm going to go around about 50 minutes or so. So we'll see how many I can get through. Any questions, just shout up. All right, I'm going to start with the Aussie yen. Now, this dashed line just represents where the start of the month was. And I didn't manage to get any of this move up here, because I was looking at this in more of rally mode at the start. However, some of the things that have been happening in the market, the most definite thing that's driving the market is central bank interest rates. And through that period, interest rate hike, unexpected hike from the Australian central bank, and more of a hawkish tone. And that's what's been kind of driving up there the carry trade. Now, You wouldn't be wrong if you're looking at a higher time frame at the time. This is where the start of the month was. You wouldn't be wrong thinking that maybe price was going to come up here in rally mode because we moved down to a lower bottom. But of course, we've shot all the way back up to this resistance level here. So a much stronger move up than I was expecting. In the previous month, we had a rejection candle. So it was a bit difficult to maybe jump on and get long. No anticipation that we're going to get such a large move. But if we look back in hindsight, just the weekly chart here, we actually moved above a couple of weekly levels and the structure changed. So 92.43.2. 93.031. All right, so the weekly trend changed. We broke above a couple of weekly tops, changing the weekly trend to up. The monthly trend's still down, but the weekly trend definitely turned to up. All right, this was the first weekly level, and this was the second weekly level. Now, I was actually looking for this was potentially holding here or holding here, but then we closed above on that day there. Now, the start of the month was just here. And really, we have a break of structure, two levels of structure, one here and one here. So if we get a break of resistance, changing the trend to up, broken resistance becomes support. All right. Now, personally, I will often look then for price to move up on the day chart and then pull back to structure. But clearly here, that never happens. It just breaks into a very strong trend. But if you're looking on a lower time frame for our chart, you actually did see a retest of broken resistance becoming support in this area here. So let's just review that. So this is this area here. All right, so we break above here. We pull back on the 4-hour chart. Gets a bit messy through here, but ultimately, yes, it moves up. So if you're simply looking for a pullback, and I show this all the time in my analysis webinars, is when the trend's moving up, look for a pullback on your 4-hour chart. You're drawing a fib across this range here. Looks a little bit small. I might drag it over to the right-hand side to try and make it just enlarge a little bit. Is we get a pullback. So we break above the weekly level. We pull back to old weekly resistance becoming support here. And there's also, we pull back in between the 62 and the 79% level. So if you attended my Fibonacci webinar, I think it was last month when I did it, I was talking about the continuation pattern on the 4-hour chart, price pulling back to the 62, 79% levels. So we just get a continuation of the trend, pull back, but the broken level becomes support in line with the day chart. So there was an opportunity to trade here with that 93 level becoming support. And if you did that, of course, then the market did unfold quite nicely for the rest of the month. After that, though, you know, if you're watching, and this is how strong trends unfold, in a normal market, you get these pullbacks like I'm showing you, but in a very strong market, if I was looking for a pullback to a 62% level, you know, there's a low here and we move up to a high just there. I don't think we get a 62% pullback. You know, so if you're looking for a 62% pullback here or 79, it doesn't occur. And that can often occur when you're dealing with a very strong trend. All right, so really had to be on your game here. When structure broke, look for the first pullback on the 4-hour chart, and that would have offered you a trade up from support, broken resistance becoming support. Now, if we just go back to the day chart at the moment, you know, I'm not quite sure if we're going to top out here at the moment. I might just go to the monthly chart. As we're into the new month, as structure's been forming last month into the new month, through the month, I did say watch this resistance level, maybe to be a topping out level. That could be a left shoulder head. Could we form a right shoulder here? So we may form a right shoulder there over the course of this new month. You can watch out for that. This, you know, pull back this week, we pretty much hide there. And maybe we're forming a little double top there at that resistance level. So maybe we're going to get a change of the structure to the downside into the new month. All right. So that's what happened on the Aussie yen last month. I don't know whether anybody was able to get on board that very strong trend. There was an opportunity there. And as I go through some of the charts tonight, you're going to see that this same sort of setup here where we break structure for our chart, we pull back to it, and then off it goes. It occurred quite a number of times on some pairs. So, taking a snapshot, go to your own charts and take some snapshots of what actually happened here. If you see it next time, hopefully you can make the best of it. All right. Now, as I said, central banks, onto the Aussie, central banks have been the dominant thing of the interest rate decisions. Are they becoming more hawkish or dovish? Hawkish is, much more leaning to raising interest rates further. Dovish, less so. Is, at the end, this is the start of the new month, last month. At the end of May, if we move to the monthly chart, we were actually on the low of the month pretty much. And then we have a month up, which was very unexpected, but that's what the market's always correct. And what we saw on the weekly chart is we were in a downtrend down here at the start of the month, and we traded up to a new high, potentially changing the structure. All right. But as trends unfold, trends, let me just draw a trend over here. Let's say we have a downtrend, but then we get a change in trend. So the trend then goes like so, very similar to what's happening here. We were down, we've moved above the last top. So that's what we have here, is once we've moved above the top, yes, price can pull back to the top and hold. So broken resistance becomes support to move up. Excuse me. Or price false breaks the top and then pulls back. And that's what we had on the Aussie last month. We went up, broke above these two tops here, but then we pulled back and we couldn't hold at those tops and we false broke. So you need to understand what price can do at these areas. It's either going to hold or false break, and we had a false break. So even though that trend potentially has turned up, still waiting to see if a higher bottom can form this month, but potentially there may be a change there on that weekly structure. So daily, so we false broke this weekly top, 68.18. And 68.05, which is daily resistance there, okay? Now the 68.05 level in previous months, this was in May here, we false broke fractionally and then traded all the way down, okay? Then we traded above. This is around about the 16th of the month here. And I was expecting a pullback may hold on support, but this day didn't hold, it just dropped straight below. So once you drop straight below, then you should be switching to the idea then if it's not going to hold as support, it's going to be resistance. And you can see the highs on these 2 days. The high, that was at 68.04 that day. The next day was at 68.057. All right, so the 68.05 over here didn't offer support and switch back to resistance the next 2 trading days once we false broke it. So there's opportunities up here to trade that as a resistance level. Now, what I can definitely see is if you waited, if you didn't want to trade there because you're concerned it's going to move through, what I can see here is that we traded down and then traded back up, formed a little bit of a left shoulder, right shoulder here. If we move to the 1 hour chart and go back in time, you'll be able to see that is there's a little left shoulder, potential little right shoulder there. But that drop down I was just showing in the 4 hour chart. So we can do a little bit of a double top test that level at 68.05 as resistance twice, and then we drop down. So draw a fib, and you can see it comes up to the 79% level. So if you wanted to let the market tell you it was going to fail there and be resistance, it drops down. It gives you a rally back up to 79% level. And then, of course, we trade down. All right. Now, of course, if you wanted to be more aggressive, you could have, and you wanted a positional play, you could just, as it tests 68.05, you could have sold at 68.05, stop at 69.05. I know Nathan from the office, that's what he did. He sold it at 68.05 level, stop at 69.05. All right, so there we have a break of structure to the upside, which doesn't hold as support, and then it just flips straight back to resistance. All right. Now at the moment, let me just check my notes. Yep, that was the trade I wanted to talk about. We're in a day chart downtrend at the moment, but as I said before, structure on the weekly chart potentially is changing to up. That's a higher top. Are we going to come down and maybe form a higher bottom? And in terms of structure, there's a very strong level of support down here. So you could be watching down here at the 65.73 area. I put that out the other day when we had the interest rate decision. Price might come down into this area for strong support. So that's a well worth level to watch. But as well as 68.05, it held there in May. We false broke it, and I just showed you an entry last month. Is this month, if we come back up to 68.05, that's definitely an area of structure resistance to watch. All right. So that was a key area to watch. And it's very, if you look at the higher time frames, you've got support and resistance correctly drawn in. It's amazing how the same levels will operate from one month to the next. It held there at 68.05. It held there at 68.05 after the false break. All right, that was the Aussie. Euro yen. Now, this is another one of those strong yen pairs. Maybe difficult to get on board. This is the day chart look. Just checking my notes. And this was the start of the month. And I'm looking at the 13th. I'm looking in here. I'm going to be looking in here. I might have to refresh my memory on the 4-hour chart, but that's the start of the month. And of course, we break strongly north, and we broke above this level, 150.1063. And we broke above this level, 150.192. We actually broke above 3 levels. So let's just see what was happening around these levels as we break above. So 151.611. All right. So I just want to find the first break when we start to try to break through this area here. My 4-hour, here it is. All right, so this is a very similar one to what I showed you on the Aussie yen. Where, let's just go back to the day chart. So it's this area here where it was a little bit mixed here, where I actually had a lower top, and then we kind of put in maybe a double bottom here. The market was umming and ahhing which way it's going to go, but then you try to trade above there, and still it's a little bit mixed because that rejected. But then we started to move above. So we move above here. So, I'll just draw the swings in so you get a sense of what's going on. That's where we got that false break, first of all. But then we come up to here, and we actually come up to that red candle top there, and then pull back. All right. So then with your fib, looking for measuring the continuation pattern, if it can form, draw your fib from that low up to that candle high. And what you'll see is we come down within a pip to the 62 level, but we come down, we've moved above that resistance level a bit more convincingly than this false break here. And we pull back to the 62, and that level now acts as support. All right. And we move off up. So in here was where you should have been looking for. You break above resistance, it gets retested to become support. All right. Now there's another opportunity just here where we move above, we sit on top, get a candle here that rejects. And in here is where you should be looking for the opportunity to get long to trade up. And then we break north. So this is all about price moving above. This is a daily level of resistance here. We move above, pull back, retest, becomes support. Here we move above the next level of day resistance, pull back, it becomes support to trade up. After that, it becomes quite difficult to get on board. From 4-hour pullbacks, there was one up here as we're getting into the latter end of the month, pulls back to 62% level, also pulls back to the old broken structure on the 4-hour chart there. So this is in here was where you should have been looking for an opportunity on the 15-minute chart to look for an entry. It's just a continuation pattern of the 4-hour trends, and it's continued up. All right. So, but all three of those examples are prices breaking above resistance, it becomes support, breaks above, sits on top, moves off here, breaks above, pulls back, becomes support. Okay, so it's just resistance structure breaking, becoming then support for the market to further move up. All right, now the euro dollar, let's move on to euro dollar. This is the start of the month. So this is it was very difficult, the euro dollar, because it actually gave you no clue that we will be moving strongly up for the month, because the previous month, if we look in the monthly chart, very similar to the Aussie dollar, is we had a very negative month down, potentially showing that maybe we're forming a lower top here to the previous top. You know, this is a lower top, lower bottom, potential lower top forming here with a very negative month down to the low of the month, pretty much on the last day of the month, traded down. But then we pretty much then traded up all month. Did start to top out at the latter end of the month, but you know, if you're using simple things like, well, we had a very strong month down, are we going to have another strong month down this month? If you're starting to think about that in your mind, then you weren't maybe looking to the long side. But if we're just looking at structure on the day chart, if you're looking for intraday trades on the day chart, that's the start of the month just here. Is we put in a higher bottom and we break above this area here, break above this structure, clearly changing the trend to up. So in that area here where we break the structure, this is the day we start to move above into the next day, 24-hour chart. And I'm just going to put a line on that structure. 107.78. All right. So here we're kind of holding, but then we get this move up. So again, it's just looking for price to pull back to broken resistance becoming support. You can be using your fib tool as well. We moved up and we can't quite get back to the 62, but you see we come down to test. We come down and test, and then that 4-hour candle reverses. Even if you just waited for that 4-hour candle to finish and tell you what's going on, strong support rejection there on the broken daily resistance level, becoming support, and then we move up. And the next pullback offers you another continuation pattern here. You can see it pulls back, moves up, pulls back to the 62% level, actually holds there on 3 candles before then moving up as a continuation of the 4-hour trend. So once that 4-hour trend broke above your daily chart resistance, it became support, and then showed you two continuation patterns. All right, getting to the latter end of the month, we actually get a change coming in. We have this little resistance level that formed there. 109.70 was the number. And, you know, if there was a reason why you should have thought maybe price would turn the trend and turn back down. If you draw a fib across that range, we come up to the 79% level of that move down. All right. So we false break this day chart high here, try to move above, hit the 79%, and we drop back down. So what that does is create the potential for a head and shoulder pattern to form. There's your left shoulder, head, looking for the right shoulder to come in at the same level as the left shoulder. And if we move that to the 4-hour chart, looking for the 79% level with that left shoulder. That was the move down on the day chart. Comes up to tag the 79% level and the left shoulder. So you could have been trading here, stop above the high. Now it does move down, but it doesn't move down to the 0 level, but it can't move down to the 127 extension. And ever since it's been a little bit sideways. So it's not a perfect head and shoulder pattern running out to a perfect target, but it clearly fell perfectly up there to get you in. And it does offer you profit down to supports. All right. So we've had to change the structure on the day chart at the moment. Is that leading to a move down this month? We'll have to wait and see. But, you know, as we're heading into the new month, you know, we've really traded down in May. We've rallied back up in June. With that head and shoulder pattern forming to change the trend, are we now trading down in July? Is that how the structure and trend's going to unfold through the course of the month? You can think about that. Azu asked me what my thoughts on the DXY. Well, it is showing an uptrend, so that could be moving up, and the euro dollar is an inverse really of the dollar index, and that looks like it's potentially moving down at the moment. That's my general view. Things may change though when we've got the FMC meeting minutes coming out early tomorrow morning. We've got the job figures coming out Friday, and then all the inflation data coming out, CPI, PPI data next week. So those fundamental announcements are definitely going to set the tone for the US dollar. All right, next one, pound yen, which has been a very strong trend, and it's just, you know, try to give you an insight of how you can get on board these strong moves if you're missing these strong moves. Pound as a currency, the UK as a nation has very high interest rates, and CPI is not ticking down. You know, CPI or inflation is not ticking down anywhere near that they're expecting it to. So there's been further forecasts of further interest rate hikes. They raised interest rates last month by 50 basis points when they were anticipating 25. So that's the thing that's really driving the strength on the pound. All right, and when we look at the pound yen, there's no interest rate really on the yen side, so that's why we've got the interest rate differential leading to the carry trade on the pound yen here. So this was the start of the month. All right, and with this carry trade, strong inflation, hawkish nature from the central bank with more interest rates is driving the pound yen up. Now it's very much overextended. I've been saying that. And I always find it difficult to get into something that's way, way overextended. It's moved more than beyond normal moves. But if you're prepared to trade something that is moving like that and you're not in yet, then you just have to look to the 4-hour chart and look for pullbacks on the 4-hour chart. Now we started here in the new month. And, you know, we form, if we go to the daily chart here, it doesn't quite pull back to, I'm looking in this area here. It doesn't really pull back to a level of support, but it does just for, it keeps the higher bottom formation forming here. But on the 4-hour charts here, we form a double bottom. So with the day chart trend being up, this goes into a 4-hour downtrend, but then it turns back to up. So it's in the same direction now as a day chart. And there was an opportunity to trade, you know, we go a double bottom, we trade up here, we go a little bit sideways, and then we break up. So then draw your fib across the continuation pattern now, and you get a nice 62 to 79% pullback, and it's pulling back to this little 4-hour consolidation period area here. So support and resistance works in all time frames. It consolidates, it breaks out, it pulls back to the 62 area. That level becomes support. And this is really where the start of the move comes for most of the month. All right. So if you're just looking for the 4-hour trend continuation, pulling back to support, in here was where you needed to start to think about executing a buy on a lower time frame, or executing it on the 4-hour chart once you start to see it moving up. All right. And if, you know, doesn't really then offer you any great opportunity for quite a number of days. There's another little 4-hour continuation here. Moves up, pulls back to the 62 and then carries on. But by this time, after price has moved up so far, because this moves up, and it's moved up 800 pips. Doesn't look like 800 pips on the chart, but it moves up 800 pips. Once it's moved up, in my mind, by that amount, I'm concerned it's going to pull back more aggressively. But it does continue to show you continuation patterns. There's one there. I'll just draw. There's one there. So if you want to get on to a strong trend, look for the continuation patterns. It'll only be wrong if the continuation patterns can't continue. You know, there's another pullback there. So there's two in here. The second one's here, pulls back to the 62, continues up. All right. So there's two continuation patterns in there. And there was the first one that really formed was here at the start of the move. Then price is moving up. All right. So that's how you could have gotten on if you're prepared. You know, once it's moved up 800 pips, I'm not really prepared to be a buyer, but now this could move up another 400, 500 pips before pulling back. And you could say, well, if I just trade the continuations, I could have made some pips. All right. So, you know, you all have to work out yourselves how and when is something well overextended. And I've shown this before, but, you know, in terms of the structure at the moment, from the highest time frame, we are excessively overextended. So using the fib tool on the monthly chart here, you know, we're at or beyond the 127 extension there on the monthly. And on the weekly, where we haven't had a significant pullback since this area here, pulls back and then it's up. It's over 200%, it's past the 200% marker on the fib tool. So, you know, it's way overextended. So if you do buy up there and then it reverses on you, you've only got yourself to blame, because it is overextended in the medium to long term. But price can keep going up in these very aggressive markets when we've got interest rates driving the differential on the pound side there at the moment. All right, to the pound dollar. This was the start of the month, just here. At that start of the month, the actual trend on the day chart was down, but the weekly trend, the dominant weekly trend, through the month, we formed another higher bottom here. All right. We dipped below this area of this monthly top here, dipped below, but then came back above and started to move up. Now, looking through here, you would have to be executing off a 50-minute chart, because I've looked at the continuation patterns and it didn't really offer any great looking continuation patterns really through the month. All right. So depending on what your strategy is, you may have been able to get on board to the long side, but no great patterns formed. And sometimes that can be the case with a pair. But most definitely, if we just review the structure though, for the purpose of reviewing, the weekly trend is clearly still showing you a higher top. It formed a higher bottom last month to a new top area. And we're having into the new month now a couple of weeks down. But if that's all we have, then we could well be forming another higher bottom for another leg up. All right. Very strong trend at the moment overall. I think trying to go against that trend at the moment is counterproductive, especially when inflation's not coming down and interest rates are going up. So I think looking to try and trade structure to the upside is the key into the new month. Right, now the New Zealand yen, very difficult like the Aussie yen. At the end of the previous month, this is the start of the month here. When you looked at the monthly chart, it was range bound. Just drawing the rough range in. And the previous month, that's the candle, rejects at the top of the range. So in my mind, I'm thinking, okay, maybe it's moving down to the bottom of the range for the next month. Very much like, had a very strong month down on the euro dollar, strong month down on the Aussie dollar, and then all things reverse, which makes life difficult. So sometimes life's nice and easy. You get a very strong rejection. Next month just continues with a rejection, and you're just looking to follow that trend. But quite clearly, that's not what has unfolded. And we've had a break of structure last month into the new month, moving above all these monthly highs of the previous year. Now, of course, we could have a false break, but at the moment, it's looking like it wants to move up. So through the course of last month, I was looking for, the whole area of the month before was I'm just color coding it in. That was a previous candle. Just making sure, where's the first of the month? All right. And I just want to see where the first of the previous month was. All right, so this whole area here was the previous month. And then the new month starts here. All right, that first blue day. So what actually occurs is we try to come down to break the low of the previous month, and we can't. All right, now there definitely is structure here, where that the markets, this area here, we reject, we hold, we try to move below and come back up. So it does form kind of a base here. But if you've got the mindset, I had the mindset that massive rejection the month before, so I'm just waiting for an opportunity to sell. Whereas price doesn't want to break the candle low of last month, and then we reverse all the way up. Now, the day chart structure though does tell you what's going on. It changes its trend. Changes its trend here when we break above this high point up on the day chart. And then it does the same thing that I've been showing you. Once we break the structure to change the trend, it uses that broken resistance here, 85.091, to be support. If you move it to your 4-hour chart. All right, so we move above. See here, we are just drawing the swings. we move above. He wants to hold above on the retest, hold at on the retest, and then you get a little continuation pattern here. Now, of course, you could have been trading down on the retest, trading to buy there, stop below, or, you know, first continuation patterns here, it pulls back to the 79% level. Strong rejection on the candle ahead of not getting down to support, and then we move up. So again, if you study the charts over the previous month, a number of pairs have shown you this, where we break the structure on the day chart, that structure becomes support, and we get a continuation pattern, and that's how you could have got on board to the upside. It's almost exactly the same on quite a number of pairs. Once it breaks resistance, it becomes support, a continuation pattern forms, and off you go. All right. So what I'm trying to get across to you all is the market repeated very similar patterns last month on a number of pairs. Now, whether or not you're in the frame of mind to get long after maybe seeing the previous month being so short, that's always a dilemma, isn't it? On a number of pairs, I was looking for them to be moving down in June from a very strong trade-off in May, but that didn't come around. And I had to shift my thought process through the course of the month for sure. All right, New Zealand dollar. And slightly saying the break of the channel, New Zealand yen could have happened after a recent comment of the head of the BOJ, where he was saying that the BOJ projects inflation in the vicinity of 3% or so, if I remember correctly. Yeah, I can't remember when he came out and said, you know, when they come out. In any event, you know, if you're intraday trading in any form of fashion and the day chart trend changes to up here, you know, it's going to be a difficult life trying to short against that day chart uptrend. So I can't remember when the BOJ came out, so I can't confirm that with you, but clearly at the moment, since we formed the first higher bottom, we've got a higher top, higher bottom, higher top, higher bottom. It's been trying to negotiate this monthly resistance over here. It did try to break above and close below on a weekly basis a fortnight ago, but last week it closed above and it's on its way moving above there now. So clear uptrend there at the moment now. Well, it was a clear uptrend starting here, but now that we've moved above significant levels of resistance as well, it's definitely on its way up. So as well, slowly saying, BOJ seems to be comfortable with recent interest. I did see a couple of, or I saw at least one drop last week on the yen pairs, and we have actually seen a drop today on the yen pairs. So I don't know if they're comfortable. So there's quite a strong sell-off here on the euro yen today. We had quite a strong move down here, which could be the BOJ coming in. Either they've been jawboning or they've just been coming in and doing something. I don't know. I have seen some headlines to say that they're a little bit concerned that if price keeps moving up, they you know, they do what they normally do. They either jawbone or they come in and they just decide to come into the market like they did last time, you know, through the course of the last very considerable move up. So as I've been saying, we have had some extreme moves on the yen pairs, so don't be surprised to see the BOJ just come in and move price down 200, 300 pips. You know, the euro yen moved down today a good 100 pips. All right, so I'm guessing this may have been the BOJ. I don't know if anything else came out. All right. All right, I might just hop into, just as a final pair, to look at the dollar CAD. Now, the dollar CAD as well had been very, very range bound, and it actually traded quite nicely from support and resistance for quite a while. If we look to the weekly chart, so that was the start of the month. But they came out for not the month just gone, but the two previous months, they've been on hold with raising interest rates, but last month they came out with a surprise interest rate hike. That's why I said at the start of the webinar tonight, things have been very much driven by central banks and their decision-making process when they do their interest rate decisions. And we were, as you can see here, in this very kind of range-bound environment, and actually the weekly chart was making higher bottom, higher bottom, higher bottom, higher bottom, but then we had a lower top, lower top. So it was getting mixed through the period where interest rates on the Canadian side was staying still, but then they came out and we've dropped and changed the trend here. All right. And, you know, would have been very much up here at the end of last month. Looking for a short up here would have been fine because we were trading in a range. But then the significant change that we got was this low here breaking. This is a monthly low here. So I'll just put it in 132.62 through the latter end of the month. Again, this is just all about structure getting broken and trend changing. So if I just leave that line in there, if you look at the monthly chart, we actually, was it an uptrend? We formed the higher bottom here, the level that I'm discussing, put in a lower top and got mixed in through there on the weekly charts. And then we broke monthly support. So theoretically, the monthly trend is now turned to down. Broke below these weekly, we broke below 1, 2, 3, 4 weekly lows. One of them's a monthly low there at 132.62. And you can see it here, we broke below convincingly. We came back to test. It only traded above that level by 7 pips. So looking to short on a test of broken support becoming resistance up here, be it just trading it with a 100 pip stop above, or looking for a lower time frame entry was the go, and it traded down nicely. So that was a very major level of broken support becoming resistance. It's still, you can see here over the last 1, 2, 3, 4, 5 days here. 1, 2, 3, 4, 5 days out of 6, including today, has tested that level. And again, if we close below there today, then you may have to anticipate that we can't move above that broken level of support, and it's another opportunity to trade down in the new month. But that being said, you know, looking at that area, let me put a line on it. I don't think it offers you a fib retracement into the area. Just comes to the 50, so it's not ideal. But you know, watching that area on a 15-minute chart, we'll go to a 15-minute chart and see what presents. But that was the area. Once it breaks, you look for that area to become resistance. All right, here's the trading day where we come up. I mean, a simple trend line break, maybe a few more pips than you want to risk, but there's a simple trend line break. Stop above the high. You need to risk, well, you only need to risk about 25 pips, no more than 30 pips. Wait for your trend line break from a test of that broken major support level. And then if you're holding the trade, you can see then it moves down nicely from that level. Of course, now we're back up there to retesting. So retesting that, if we further fail there on the retesting through the course of the week, you may see another opportunity to trade down. So, you know, most of the trading I saw last month wasn't patterns. There was a nice head and shoulder pattern on the euro dollar, but other than that, it was really a lot of break of trend on the day chart to the upside. So daily resistance getting broken to change the trends, becoming support, and that was your opportunity to get long on those pairs, on a number of pairs there. All right, so that's my review of last month. Not an easy month because I'm sure, I know in my mind, I don't know about anybody else, of the pairs that had very strong months down, in the previous month, I was anticipating, okay, we're trading down for the month of June, but that wasn't the case. And sometimes the market doesn't give you what you want, what you're anticipating. But that's trading. The market is always correct. If you see your day chart trends swing back the opposite way, you then have to get your other hat on, your buying hat on, and then look for trades in the opposite direction. But like I was showing the euro dollar, trading up for most of the month on that break of that area there. But now we're maybe moving to the downside. You know, this is rather sideways at the moment, but it is lower top, lower bottom. All right, the trend structure there in the day chart is clearly to the downside. So the most immediate trend is down. And on the weekly chart here, we could be forming a lower top here. And, you know, whilst it's not perfect head and shoulders by any stretch, because there's your left shoulder, hasn't come up to the height of that. And this is a higher bottom too. So it's not a perfect, you know, is there a weekly head and shoulder pattern there forming as we're in the new month? We'll have to wait and see. It's a bit mixed there. As I say, it's all about central banks. Something comes out from a central bank at the moment. It's a little bit different to the said last time. You know, you've got two central banks here, the US and the Eurozone. Last month, I don't think the Eurozone itself went into recession, but the German economy went to recession. That's the biggest economy in the Eurozone. So, you know, things are getting a little bit mixed on those two currencies versus each other there. There's a definite fight going on. Structure is getting a little bit mixed there in the short term. And slightly saying the FR40 recent top has nicely coincided with the start of the clashes. Could be going down for some time. We can have a look at that. Yeah, I haven't seen the news over the last couple of days from France, but it hasn't been great there. Definitely faltering here, but you know, it's an uptrend. So, you know, it might offer a very significant, say, dip. You know, before moving up. But yeah, you can see it's false broke that top. So it looks like it wants to have a healthy retracement in the short term for sure. Yeah. All right. Okay. Any final questions from anybody? I see New Zealand dollar. Well, it's been a bit difficult, the New Zealand dollar. Very much like the Aussie dollar, Euro dollar, it finished on the low of the month. And then we've traded up. And, you know, from the weekly perspective, what has been a very clear downtrend is getting maybe, well, you know, we've had a 62% retracement, but we might be forming a higher bottom here. It's getting a little bit mixed in my mind. It's not wanting to continue down below these support levels to the left. And that day chart trend, I mean, we might form a double top there, the 6203 level. I said yesterday, I'd be surprised if it moves above that through the Independence Day. And we're still holding at the 62 level. But it is getting a little bit mixed here. Is this going to hold and then continue down with the weekly trend? It is getting mixed. And we have the interest rate decision next week. So that's why it's getting mixed. It wants to know what's happening in the interest rate decision. So, you know, sellers are pushing it down, traders are pushing it, you know, buyers are pushing it back up. It's not really going anywhere. It's trading in approximately 100 pip range at the moment. You know, if we forget about the day chart at the moment, the weekly trend is still up is still down. If you move back to the weekly trend is still down. If we trade above 62.47, it's no longer down. So as long as we don't trade above 62.47, that could be holding as a lower top to continue down. All right. Doesn't want to move below these lows with any conviction at the moment to the left here. You know, maybe through the month, it's going to come up and retest the double top and create a triple top at the top. It's a bit mixed at the moment. Trading this pair for me, I would be watching up here. Can the market get aggressively moved up to that double top area and then not move through? That would be a perfect scenario, but not an easy pair at the moment. It's getting very range bound. Okay. All right, everybody, just to give you a heads up, from the webinar front, tomorrow I've got more live market analysis after, we'll see what the price does with the FOMC meeting minutes coming out early in the morning. That's at 7. And for those that maybe, if you're new to trading or you're just interested in learning another strategy for the purpose of learning and seeing if something gets said that you think, okay, I like the look of that, I could incorporate that within what I'm doing. We have a quick start strategy that we're going to be going through tomorrow, myself and Nathan. I'm going to be talking about trend and how to determine the trend correctly, but then what is the problems of that? And then we have a strategy that we've been developing for new traders who want to get started quickly. So it's called the quick start. So Nathan will take you through the setup and I'll be on the sidelines there talking as well. So that will be at 8 p.m. tomorrow. Okay, so that's what's coming up. So thanks very much for the questions coming in. Hopefully you found that helpful for a review. Hopefully you could learn something there and maybe put it into practice in this new month coming. With that in mind, thanks very much for your attendance and questions. It's always appreciated. And if you have the time, I look forward to seeing you tomorrow. Thanks, everybody.